Hello everyone, welcome to Elliott Wave SPX.com YouTube channel. Today is Friday, March 22nd, 2019. The time is 3 a.m. GMT. So here we go for today, last trading day of the week. We are looking at the chart of the S&P. Continues to make a new high still in the shorter cycle. The rally has been relentless. And after the Fed's meeting saying that they are going to keep the rates low, it's a little bit euphoria now in the market, thinking that okay, that's a good environment with a low rate, abundant money supply, and continues to extend higher. So we're gonna take a look here technically in the Elliott Wave where we are and what we can expect. Now as you can see, this is a short-term chart, 45 minutes. We have a wave 3 here, wave 4 here. So that means that we are in the last wave 5 rally right now, and we're gonna take a look at what that 5 waves is. That 5 waves starts from the low in last year. Okay, since then we have rally for 3 months now, and going to end the quarter in a positive note as a 5 waves. And we are in the last leg now in the wave 5. And as you guys know, wave 5 subdivides into another 5 waves. So we have another wave 1 here, wave 2 here, right? And we are within the wave 3 of 5 right now. So that means since we have a new high above this wave 1, okay, yesterday, that means that any pullback now is expected to hold above this 2811 in the shorter cycle and extends higher again. All right. Now another possibility will be that this is doing a flat like this, right? It can do a flat and then extends higher. All right, that's going to be another possibility. Now if that's the case, then we have to adjust the count, right? If it is a flat, then this is not a diagonal, but this one is something like this, right? Something like this, and then it drops as a 5 waves down in the C leg, expanded flat, and then rally again. So the idea here in the shorter cycle then is this is the most bullish pivot at 2811. As far as the pullback stays above here, we can continue higher. Detour alternate suggests that this is a flat. Now if this is a flat, we're gonna have a detour and get a 5 waves down. It's going to feel strong move on the downside, but as far as it stays above here, which is the secondary bullish pivot, we should extend higher again. All right, so first degree pivot is this one, second degree pivot is this one, and as far as the dips stays above there, we should extend to the upside. All right, so that's the idea of the shorter cycle in S&P. Now let's take a look at slightly higher degree and see what we can expect. This is the S&P daily chart, okay, and this is the bottom in December 27 last year. Since then, 3 months we have this rally, almost like a V-shaped kind of recovery, right, after the sell-off that started in September of last year. Now we can see here that this sell-off broke below the channel that came from 2016 low, right? And it actually found a support right here from the 2009 channel, right? So 2009 channel give the support in S&P, but it broke below this 2016 channel. Now this rally here in the wave 5, so we are labeling this as a wave 5 waves up, should be I mean, if it continues to extend higher, I think it's going to be finding resistance somewhere around this one. After it retests this 2016 broken channel here, this should find a resistance somewhere around there, right? So more or less almost like retesting last year's peak again. So last year's peak is around 2940, right? So this can continue to go higher, slowly higher, like what we've been witnessing here, until it retested that previous peak, maybe somewhere around 2910, 2920, right? That will be the target on the upside. Then from there we should be starting to get careful, and at that point we might have already done a clear a clear 5 waves move from here that we can see clearly, and that could suggest that we are close to, you know, we are close to ending the move. We are close to ending with 5 in blue, and then it can start to at least correct this entire move in a larger 3 pullback like this, right? So shorter cycle then, as far as we stay above this in the first degree and this in the second degree, all right, we favor more upside in the shorter cycle, okay, with the right side in green color. Oh, by the way, there is a blue box here, which is the inflection area based on this 3 swings pullback. So if anybody, let's say, bought these dips last time, this 3-way dip in this blue box, they would have enjoyed this rally right now, right? And can already put the stop loss to the entry level, which what we call a risk-free trade. So now, as far as the dips, the short-term dips now stay above here, we should continue to extend higher, but the more important level for now from the bullish view is this one, 2721, which is the more important level compared to this one. As far as this level holds, we can continue to extend higher, likely to retest this 2016 broken channel around, I would say, 2910, 2920, and then from there we got to be careful, because then we can see a larger pullback from there. Okay, so hope you enjoyed this video, and as always, you can always try our service, and we have a 14 days free trial. The link is provided in the description of the video. So other than that, I wish you all have a nice weekend, and see you all again next week.